Good afternoon, everyone. We are now live on YouTube. I wanted to show our members something though. Let me go here for a minute. This is a tool that we're not prepared to fully explain here. Um, but and maybe we should. I might come back to it. But what I want to show, this is a planning tool that we've been working on, and let me highlight something here. Let me get a maybe, how about a white marker? And I want to make everyone aware of something. This, this area here. This is in large part why we think a lot of retail traders suffer a lot. Let me do something here. I'm going to set a stop loss amount. We haven't rolled this out to our members yet. It's a work in process. It's meant to be a planning tool. So if I set a stop loss at $200 and I set a profit target at $200, and we're not going to discuss anything else, but stop loss is at 200, profit target is at 200. This would be on any strategy. What is the necessary win-loss ratio to break even? 50%, right? Makes sense, right? You're not going to make any money if you don't have a 50% win-loss ratio. So now let's just play with that a little bit. What if I widen out the stop loss? What if I make it $300? Now the necessary win-loss ratio to break even is now 60%. So when you widen out the stop loss, you will win more. You will win more. You have to win more. You've got to get over 60%. Now, what is unscrupulous is when somebody in like the hockey captain is talking like you get a 90% win rate. Watch what I'm going to do. I'm going to set the stop loss at $1,200. If I have a stop loss at 1,200 and I have a profit target of 200, I'm going to win a lot. But I need to win 85.71% all the time, or I'm not going to make any money. I will lose. That's why the win-loss ratio isn't that important to us. Now, there are some caveats to this which we could get into, but so these folks that are promoting, oh, I got a win-loss ratio of 90%. That's fine, but it doesn't mean you're going to make any money because they may not have a disciplined exit or a disciplined stop loss. And you get in there and blow up. Yeah, they get a 90% win rate, but it isn't going to make any money. Whereas if we go the other way, let's remember we started at 200, 200. Let's say we put the stop loss at 100. And now we have a profit target of 200. You only have to win 33% of the time, 1/3 the time to make money. I'm not saying you're going to, right? And you can't do it purely on the stop loss itself. But a person might have a decent strategy. They might have a decent approach. And if they are eating like a bird and shitting like an elephant, excuse the French, but their losses are outsized over their profit, they're never going to make any money. Now, this tool is going to do a whole lot of other things in here too, which we're not prepared to explain. But the management of the stop loss, and of course, you can't have a winning strategy just on stop loss and profit target alone. But you can take a decent strategy and destroy it if you are trying to get that good, that feel good, win-loss ratio. So, in any case, didn't expect to go there, but if folks are passing by. Here is Swing Machine doing its thing, and we're running a little program here that we're going to continue to run. I haven't intervened at all, so we're going to let that run. But let's just take a look at Swing Machine. And welcome. Today is April Fool's Day. And no, this is not April Fool's here. Let me go and highlight what we got going on. And we're not trying to prove an outcome here with these YouTube sessions. I say this all the time, but I just want folks to understand we're here just to build some awareness of who we are, what we're about, and give you a chance to answer questions. So the VIX goes long at 7:25 a.m. and it's still trending up. So that is a bet, a very leveraged bet that is coming into the market, that the options market, that they're now going to back away from their calls and they're going to start buying puts, which means the market is going to be defensive at minimum. Maybe it's going to be something more. So let's go look at the ES. And now we're going to choose the 5-minute, right? We can trade the 1 minute, you can trade 2 minute, it's up to you if you have this tool on your desktop. But if you had been trading the 5-minute this morning and you were up for it, at 7:05, the ES turned down. So in this instance, the market turned down before the VIX futures, and then the VIX, 20 minutes later said, you know what, this isn't going to be a good day for the bulls. The NASDAQ on Swing Machine went short at 10:35, a little over an hour and a half ago. So you'd be up $2,000 with a mini, $2,000 with a mini. And then the Russell. Remember everybody talking about the Russell, Tom Lee? Oh, the Russell's going to go up 50% in a year, on CNBC, Now, of course, if it falls 50, 60%, you'll never see that guy again. They'll just disappear. You talk about fake news, those people, the worst of the worst. But $1,800. How about the Dow? It's at 515. This one went off at 350 this morning. Short. $2,000, 1,900, 1,800, 2,200. There are 20 trading days, 20 to 24 trading days in a month. Your job, my job, our members' job is to get into the market, shut off all the noise, shut off all the bullshit, and extract cash and come in and do it again and again and again. Now, how you go about doing that is going to be up to you. We have, at this point, we have 70 various tools, but within those tools, there's an infinite number of combinations and things that you can do. So that being said, you can do everything that we're doing and you can blow us away. You can do even better. And that would be just fine. Now look at oil. Now, if you want me to make up a story about what's going on, if it makes you feel better, I can make something up. But just know that I'm not going to do it. And then gold. Let's see. Is that GCJ? That contract looks a little quiet down there. We're not trading gold at the moment. Let me double check that contract. That doesn't look quite right. CME, gold. I think it's right, but let's get a bead on what the contract is. It trades, doesn't quite look right. It isn't. So it's rolled. Sorry. So we're not trading gold here, but I want to have the right contract. So it's GCM 24, GCM 24, and GCM 24. Don't be spooked by okay, why didn't that? There we go. Just got to refresh this. There we go. Don't be spooked by the futures markets. It's pretty straightforward. We have the actual contracts that we're trading, or that that can affect a trade, and then we have what we call continuous contracts with a little at sign. So these are the actual trading contracts, and then if you put an at ES in the root, then you can, for charting purposes or for price tracking going back weeks or months or years, that's what we would use. But for actual trading, you need to know the actual contract that is, and it's just one. It's these contracts roll every 3 months. Oil is every month. Gold is like every 3 months, and it's a little bit odd. It's not. It happens to be the same month here as the indices. It's not always the case. And then, of course, there are other markets as well. As you can see here, Bitcoin, this Bitcoin futures contract is 5 times the Bitcoin. So it's a big boy contract, and we're using the continuous contract there. So Swing Machine is having a beautiful morning. We're not trading it right now. We're doing something specific, and we're doing just fine. And but if you have any questions, be sure to visit the website, and you're welcome to email us, and you're welcome to call. And otherwise, we're going to kind of clam up and let you watch. We'll probably be on up until about 1 o'clock. Have fun. The trading that you're seeing in the position in the upper left-hand corner is a fully robotic trader. That's what that is doing. I'm not intervening at the moment. If I do, I'll let you know. We've been running that since 6 p.m. The account is to the good of what, about 1,100, 1,200 bucks. And now we could choose to shut it off, but we're going to continue to let it run. And but you could, as an example. One of the things that probably more valuable than any one strategy or tool or anything else is what we spend time going through on Q School, and is how you approach your trading and how you begin to make moves from discretionary trading to mechanical trading to robotic trading, and the steps that you need to go through. Um, it Is it easy? I don't know how to put this. I think it is relatively, but you've got to be very aware, and that's what we try to do when we're teaching, is to make you aware of the steps that you need to go through. If you try to cut corners, um, oh, I got myself this airplane and it's got all these special bells and whistles, and I don't really have to go through instrument flying. I don't have to do that. I'll be okay. Um, you may not have a very good outcome. Okay. And I don't want to be in the seat beside you, right? So you really do have to work at it. And we have some steps, so it's kind of like instrument flying, but instrument trading. They call that, I think, flying under the hood. So we have to encourage you to get set up and to trade, we call under the hood. And you need to see what you need to see, and you need to experience what you need to experience, because I can't give you experience and I can't give you, therefore, the confidence. That has to be um, gotten, and that applies to probably just about everything, right? Any questions, let us know. The short gold is, and we think gold is probably going to pull in here. We're not bearish gold, but it's come very far, very fast. And let's mark it up here, and we'll paint her red. And this has happened right in front of our eyes here. On a 5 minute, she went short on a 5 minute interval. So you don't have enough time. We have plenty of time to trade, but we don't have enough time to take into account when we're trading intraday any kind of narrative. The narratives just don't matter. We do also think that Bitcoin's coming in, and again, we're traders, we're not hodlers, we're not. But that's okay if you do. I would just encourage you to learn um, how to trade and hedge. If anyone has any questions on what it is you're seeing, just let us know. You may be seeing news stories come across, kind of interesting, say the least, but part of the world is getting even more dangerous that Israel has taken out a senior Islamic Revolutionary Guard, Iranian, in Lebanon with a rare daytime attack, and they took his ass out. Good riddance, but still very, very dangerous place in the world right now, and we're not immune. I wouldn't want to be shorting oil. Not saying it's going to be linked. I'm not saying it's going to go up on account of that or anything of the sort. But um, When you have that sorts of issues, there's going to be a premium. So, in any case, those of you that are watching on YouTube, if you have any questions on what it is we're doing day in and day out, don't hesitate. Be sure to visit the site, and we're just doing our thing. Once again, thank you for stopping by. Any questions? And maybe we should make a note up here that the trades that you see going in are fully robotic. And let me make a note up here. Let's see here how make it a little smaller here. If you have any questions on who we are, what we're about, the trading you see here is fully robotic. If I intervene, meaning I take a mechanical trade, I'll let you know. But we haven't since we haven't at all. We started running our little program. The trading you see here is fully robotic. Let me draw a little arrow. We're not trading swing machine at the moment, although I'm sure we have members that are. And I probably have whoops, we don't want a red arrow. We'll keep it yellow. And right here, right? That's what that means. This is fully robotic as reflected here. We started running this program at 6 p.m. on Sunday night and with a balance. Now, you don't need $25,000 in your account to trade intraday. You don't. The amount of margin necessary to trade the NQ between the hours of 9 and 4 is approximately $1,900. Now, I don't suggest that you trade that size. They'll give you enough rope to hang yourself or any of the brokerages. If you have an account that is just, $2,500 or $3,000, I don't think that's a good idea because, one loss, cut your account in half. So, but you can trade when you're learning micro contracts, which are 1/10 the size. So as an example, now when you trade outside the normal hours, you do need to have the full margin, which is a sizable contract, about 19,000. We'd like to have even more capital in the account, but as long as you're trading very mechanically, very robotically, very measured, we're which we are, we're comfortable with that. But we trade futures intraday because they're highly liquid, they're leveraged, and we can get in and get out and do what we need to do, namely extract cash flow from the money flow. If we're going to go further out, we're going to go out a few days, we're going to go out a few weeks, we're going to go out a few months, then we're going to reduce our leverage, and we're most likely going to use options, and we're going to define our risk with those options. If we're going to go even further out, a year, 2 years, and we're going to make an investment, then we're going to most likely not use any leverage. We'll dollar cost average in over a period of time, take up a position, and we won't even pay attention to what that position does on an intraday basis or even a daily basis. So if you consider yourself an investor, and you are calling your brokerage account, 5 times a day to get the account value, you're not helping yourself. In fact, you're magnifying, the greed and fear, and that is not going to serve you well over time. It just isn't. You'd probably be better off just not even paying attention to it, right? And we're traders, right? So that's not heresy on our part. There's a place to, if you want to, hodl and invest for the long term, there's a process for that. You can use a lot of our tools to do that, but you have to know, you have to define that for yourself before you start buying and selling anything. And if you can't define it and you're not sure what you're doing, then you're better off not, don't take the plane up, don't take it off the runway if you don't know where you're headed, where you want to go. Any questions, let us know. Getting 24 trading days in a month, take Friday off, throw 20, $100 a day. That's 2,000 a month. 200, 4,000. 300, 6,000. You put together, you put together 10, 20, 30 days like today, you may very well change your trading life. It can happen that fast. Our members work very, very hard. They put in a lot of hours, they put in a lot of time thinking this through. We're here to try to help you if that's what you want to do. If you want to surf the net for this trade, that trade, and haphazardly throw stuff on and off, then we wish you the best on that. But I don't think that's going to serve you very well over time. We're not suggesting anyone take any of these trades. We can't even begin to, in service how this tool works. We have other tools as well. The reason why we do these short YouTube sessions is just to create some awareness as to who we are. And so if you have any questions, certainly let us know. If you visit the site, the website, there's a lot of information there about who we are and how we structure our memberships and so forth. You still have questions, you can email us and you're welcome to call. Okay, we're getting close to 1 o'clock. I only had a couple of people come through. That's okay. That's all right. Everybody's a genius when the market's making new highs and it's so easy and you buy and hold. That's the obvious decision, right? Buy and hold. Well, I hate to be a bearer of bad news, but just because it's worked for the last 14 years doesn't mean it's going to work for the next 14. And it doesn't mean that you're not going to have a 50, 60, 80, 90% correction. Doesn't mean that we're going to either. The issue is one never knows the future. Has it happened in the past? Yes. And if you are 5 or 10 or 20 years even out from your retirement and you suffer an 80% decline and you're fully invested, it's going to have an impact. It's going to leave a mark. And otherwise, you can learn how to trade the volatility and extract cash flow. We're here to try to help you. We can have an intellectual discussion as we go through. We spend quite a bit of time with each person, and then you get underway. Any questions, let us know. At 1 o'clock, we'll need to turn down, and we've had a pretty nice session since last night. We may choose to turn the program off and turn it on again tonight at around midnight or so and let it run overnight, but we'll see. We'll keep you posted. Any questions, let us know. Good afternoon. Good afternoon, everybody. We got nobody. Nobody. We had 10 passerbys on YouTube. Holy smokes. Amazing, isn't it? Everyone has their own ideas about what the market is and what it isn't. And I'm not out to change any of those ideas. Not at all. Nope, not going to work that hard. But if anything we're doing, for those that might pass by at a later time on YouTube on a delay, if anything that we're doing resonates with you and you'd like some help, and we're here. It has been so quiet. I just might let this run, and we're doing the program's doing a really nice job, isn't it, kids? That is a beautiful thing. For our members, I know I've been working on this a long time and promising I will try to get out a beta this week. I will, and it very well may be this one here to you. We did get out the new radar. We're working on some other radars as well, a little bit you've seen. So I'm going to try to be getting out to you every week here some new things. Let's highlight for those that might be passing by. Let's take a look, right? Let's go first to the VIX. It's not just the VIX. It's a futures contract on the VIX. It's highly leveraged. It's highly sensitive. We can trade it in and of itself. It's very, very good. So let's see what is going on with the VIX at a 5-minute interval, a 5-minute clip. Now you might say, well, it's just $400. Well, it's the signal that is important. At 7:25 this morning, the VIX starts to trend up. That is a signal to our members and everyone through Q School. There could be a problem in River City today, real time. I'm not talking about tomorrow or Thursday or next week or what's going on with Tesla and Nvidia or AI. I'm just telling you right here, right now, there are very, very large bets placing at 725 that the market is going to turn down. And you might say, well, that's rather obvious, Bagger, because, and you'd be right, the 5-minute interval, the ES, turned down at 7:05. So you say, well, the market turned down at 7:05 and these guys just responded. Yes, they did. They did. They came later, but they confirmed the signal. And if you took this at 7:05 with a mini contract, you're up right now $2,000. But Don, I saw it go up and down and down and up, and I was watching the money, and I made my $300. Okay, well, you made your $300. You start making decisions based purely on the money. You can make decisions on the money, but not purely on the money. You will be handcuffed. You will be in a straitjacket. It will drive you to drink. I don't drink or smoke weed or do anything else. Why would you? Where else can you have so much fun? I want to be stone cold sober to enjoy this. If you did it with a micro contract, you would be up 200. If you did it with 10 minis, you're up 20 grand. Take a couple of days off. Enjoy, right? Enjoy this place. How about the NASDAQ? We did this earlier. And you can say, I can see what you're doing at 1035. The NASDAQ turned down, right? Again, 2 grand. There it is. Here's this one, the Russell. But Tom Lee on CNBC came out last week and said the Russell is going to increase, Judge Wapner, it's going to increase 50% over the next year. Okay. You get the big black glasses. Notice those guys change jobs like every other month. They're always with a different bank. You know, they just go into the highest bidder. You know what? Maybe he's right. Maybe it is the NASDAQ, maybe the Russell is going to go up 50%. Maybe it doesn't. It goes down 50%. What are you going to do? You're going to call CNBC? You're going to call Tom Lee? Are they even going to bring him out? No, they'll bring him back out. You know, when the market's down 50%, it'll be November. Oh, I think we're still going to go up. I think, sorry, kids, I got that one wrong. I'm being facetious, right? But these people have hundreds of thousands of, of watchers and people listening to that crap. Not millions anymore, but hundreds of thousands. And we get 4 or 5 people, which is great. You know what? We're not trying to reach the masses. We just want to reach the folks that know. Our conclusion is that the people that we want to reach will know when they hear us, when they see us, when they visit the site, they will know. And those are the people we want to reach. The folks that are watching CNBC and are, buying into that, I don't want to waste their time with me. Then I don't want to waste my time, right? Such an easy target for them, right? Not them personally, but CNBC. All right, YMM. This is the Dow futures at 350. So here's 2 grand, here's 2 grand, here's 2 grand, here's 2 grand. Do you think you could have made your $500 this morning? Could you have made 500? What 500? Well, when you can do it day in and day out, 500, 20 trading days is $10,000. The oil futures dipping here at the moment, but we're going to paint that one green, right? So what Swing Machine is trying to do, Swing Machine is trying to keep you on the right side of the market. That's what it's doing. Now, we're not trading Swing Machine right here, right now, but it is fun to watch it. We do keep it front and center. Look at gold, and we told our members last night that gold was likely to come in. So let's put it. No, I'm not bearish, gold long term. I'm not, but so let's do this one here, and that one's at 950. You had shorted it. You're up about 700 with a mini contract. So pretty nice stuff. And then yes, Bitcoin. Now this is a 5-pack Bitcoin futures contract, so there's quite a bit of leverage in here. You could use micros, but Bitcoin shorted at let's see, yep, today at 1025 at $70,100 a coin, 155. Now, if you are a hodler on Bitcoin, no problem. You only live once, pile it all in, have your stack. I got a neighbor, he's got a flag outside his house. You've heard, at least he used to. I don't know if they got on him, but when we just took all right, so the machine just took a profit there. Do you see that? And the machine is trading this robotically, not off of Swing Machine. It's trading another program, and we are up $2,000. So we have a decision to make here. $2,000 in less than 24 hours, trading one mini contract is a very nice outcome. So we want to also, kind of demonstrate best practices. We don't have to trade ourselves into the ground. We're going to let it run a little bit. But if this thing comes back, what I'll do is I'll make a mental note. And that's a high water mark for the account, 2,100. If we come back more than 50% of that, I'm going to turn the strategy off. Otherwise, I'll probably let the strategy run a little bit longer and see if we can pick up. This is a beta strategy that we're running. We've been working on this strategy. Man, I tell tell you, we've been working on this thing for weeks, weeks. And we are going to get this to our members, so bear with us. And it it's just really been interesting. We're not going to be able to share it with you on YouTube, but we will share it with our members of what we expected one thing. It wasn't doing what we expected. It was doing almost the opposite. And so we made some adjustments, and it is amazing, right? And so that is the beautiful thing about program trading, robotic trading, algorithmic trading, whatever it is. Before you sit your little fanny down, and you're ready to go live, you're ready to go start trading, and you got Steve Neeson's book on candles, and you read about stochastics and MACDs, and boy, you're ready to rock and roll, and you're gonna sit there and you're gonna trade your fanny off, and you do it for 3, 4, 5, 6 months, and your back is killing you, and your account's killing you, and it just doesn't work. You see, we can write programs. If you can describe to us in English what it is you're doing, or you think you're doing, or trying to do, we can write a program. And if we can write a program, which we can do, then we can backtest it for the previous 6 months before you spend a whole lot of time on it and a whole lot of money, and get an idea, a concept of whether or not it is even worth pursuing. Now, there's no guarantee that it's going to work in the future, even if it does look good in the back test. But we got other ways of then scrambling that data to mimic the uncertainty of the future and get an idea, which is exactly what we've done here. We're working on this program for weeks and weeks and weeks, thinking we're going to do A, B, and C, and suddenly it starts doing X, Y, and Z. Like, what the hell? Not the damnedest thing. And that's what the data was showing us. It's like, okay, well, I wouldn't have thought that. So we start making adjustments. We start back testing. We start looking. And you have to be aware of what it is you're back testing, where the spuriousness is, where it isn't, how you can isolate that a little bit, and we'll see. And that's what this baby is doing. Incredible. Looks really, really good, folks. So this is actually our first run with it configured in this fashion. What'll happen for our members is when we have these betas, and we had this one, now we had really, really high hopes on Thursday of it running. It is not running on 3-line break. We had hopes of it. It didn't do well there. We're still going to come back, but we floated back to what we're working on, and it's running off of what we call a point and figure. And we just think it's a little more accurate. And but we are going to come back around. But this is the first time. So this has been running, no intervention. I haven't scalped it. I haven't shut it off. We've just been running it full tilt. And she started right out of the gate last night at 6 p.m. Been running all night and doing what it's doing right now. So we're pretty pleased. We can take a look at what some of the stocks are doing. Now, one of the tools that we just rolled out to all of our members over the weekend, we don't use moving averages. We don't, but we will, for the most part, we don't. There may be a couple of little places we might, but for the most part, we don't. And but we like to pay attention to them because it tells us where the retail trader is, what he's thinking, where he's at. And in this particular tool, let me see if I can bring it into view. I'll show you what it looks like. Try. And we just call this the SMC Retail Trader Radar. Here it is. at a glance. Maybe I should remove some of that writing here so you can see it. So let me do that. I'll erase those boxes. So this is this trader, and we have the whole S&P 500 in here. And it can show us stock by stock where it is in relation to the 5-day EMA, exponential moving average. It's a little bit more sensitive than the simple moving average. It's weighted closer to the future. So it can show us. So we don't even need to see a chart. So you take Broadcom, it's over the 5-day, it's over the 10, it's over the 20, it's over the 50, and it's over the 200. It's, if you were to punch it up on a chart, you know, I can virtually image this in my mind, what it looks like. And it probably looks pretty good. You take NVIDIA. NVIDIA is 57% over its 200, 14% over its 50, and just 2% barely over its 20. And now it's fighting under the 5-day. So it's there's some profit taking going on in NVIDIA. We can use this in a number of different ways. We can get an idea of relative strength, relative weakness, and who is most strong. So you get something like this one. This is Western Digital, 5% above its 5-day, and it's rocketing up, right? So I don't know if it's got earnings, but these guys 4 or 5% win, little rockets, That's what that means, little rockets. Versus Triple M, kind of submarining, going under. But equally, what we can do is, now we have to do this it's a little mechanical because this side isn't fully automated, but we can take the amount of stocks over the S&P 500, and we did this last night. 87% of the S&P 500 were over their 5-day average. 87% were over their 10-day. 87% were over their 20, 88% over their 50, 84% over the 200. The percentage of S&P 500 stocks completely over all of the average, 87%. This box is shrouded in green, and it's on a gradient because as this adjusts, this box will turn green or red. Why is it red? When everyone is in the market, who is left to buy? Everybody's in. So that's why this begins to turn a brighter red at 87%, 90%. Now you might say, well, it never goes down. Oh, yes, it does. Yes, it does. We have had, over the last few years, instances where less than 10% of all the S&P stocks were over all their averages. And it was about 8%. And the box was colored green. And what do you want to do there? You want to buy. You want to buy anything and everything at that point. Warren Buffett has a saying, when they're yelling, everyone wants to tell you at the dog park, at the party, at St. Patrick's Day, on the first tee, they all want to tell you how rich they are. They're yelling. They want to tell you how rich. They want to tell you how much they made. When they're yelling, you want to be selling. And when they're crying, when this bugger goes down to less than 10% and they're crying, they don't want to talk about the market. Not at all. At all. You want to be buying. This is a beautiful tool that we get. Now, we don't track it. We're not going to track it every minute of every day or even every night. We will track it week to week. We will track this, nightly. But this gives us a pretty good view of who's doing what and who is struggling. By the way, the 5-day breadth is no longer, last night it was at 87%. It is no longer at 87. It's down. When I think about this, guys, I remember watching this, we just rolled this out. We could shadow. I didn't want to add too much color here. We could paint these boxes, but this SMC retail trader, Let's see what else we can show you. Let's get a view of the ES on a Renko chart. And this is buy, 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 buy. All buys. This is all we're doing today. We're just pulling back ever so slightly on a Renko. Just pulling back just a little bit. We need to take out one of these swings and stop moseying down. We think ultimately, and I know you don't, I think this area, 4,500, is going to need to get tested. We will climb the wall of worry, melt up, melt up, melt up, and we could get here lickety split. If you are holding an S&P cash put at, let's call it 5,300, it's going to cost you to go out about 45 days. It's going to cost you about 6 grand. If you go out 90 days, it's going to cost you about 10 grand. If you happen to be holding one of those and you come down to 4,500, that contract that you spend 10 grand for is going to be worth 70 grand if you get it right. Now, there's other ways to play it, and you can not use as much capital. You can use the ETFs and so forth, but we think these markets are a little bit ridiculous at this point. Let's take a look at the intraday view. This is an intraday view. This is the 1 hour. 3 hours ago, the ES on an hour turned down. It's down a little bit, but this is an hourly. So you can see the ES is pulling back in Q. Russell telling itself. The VIX is headed up in the YM. And our view of the market is rolling over. Now, we're not suggesting anybody do anything with their money. We don't do that. We build tools to help you trade your own game. It's your money. It's your time. You play, our members play their own game. A lot more fun. Hopefully. Now the VIX, spot VIX is trading at, let me go get a beat on it, tell you exactly. Bear with me. The 30-day VIX is trading at 14.03. Normal VIX for the S&P trades between 18 and 22. We're at 14. Now, I know nobody cares about anything right now. I get it. I know that. And we can't make them care. But we are seeing pressure coming up. Let me show you. Okay, let me show you. I'm not making it up. I don't even need a chart. See this? Here's the eye on the VIX. Here's this, the 30-day VIX. This is the 9-day VIX. This is the 30. Notice right in here. See the pressure coming up? Someone spooked. We're at 14. We go to 18 to 22. In my view, this market will come off. That's what I say to Susie, because we are positioned this way. We'll come off 10%. if not more. I can't explain the complacency of why people do what they do. It is amazing. When the markets were on their arse, nobody wants to buy. When they're running and running, they all want to buy. This is the damnedest thing. And if you do that, if you join them, you will get whacked. They will get whacked. But we can see here's the 30-day VIX on a daily basis. We get pressure up, building, building. Just its center is right here at 14. We just need that sucker to keep moving up. Now, in a couple of days, or when the market moves 4 or 5% or 8% or comes down 10%, what is CNBC going to do? They're going to bring out Tom Lee. They're going to bring him out with the big black glasses, and they're going to ask him, "What's going on, Tom?" "Oh, nothing to worry about. Nothing to worry about there, Joe Bag of Donuts. Just, the market is just a market, and it's just a little bit of profit taking. That's all." And that's what he's going to say. "Don't worry about it. It's a buying opportunity. It's always a buying opportunity, right?" Oh my God. That's what they do. The very originators. I love ridiculing them because they're just such an easy target. And they're worse. Can you imagine they've been on? I mean, and what's his name? Dan Nathan. And he's taken too many shots to the head. I think he was a boxer, and he should have been wearing a helmet. And then and the other guy, Giadami. Oh God. Oh, the worst. Absolutely the worst. But if that's what you want to do, if you're passing by on YouTube, that's what you want to do. That's what you want to listen to. Have at it. Go for it. Mhm. We're going to stay with this trade. I'm not going to. I could mechanically go up there and scalp, but it's really tempting at this juncture. But I'm going to try not to. I may choose just to break even if she comes back, but I'll let you know. Otherwise, we're having just a very, very fine day. And you put together, we're going to do the same thing. Now, this strategy that we're running, we're going to stay with it, but we will turn it off before the market closes today, and then we'll turn it on probably about midnight. We're going to do it again. And you start putting together, 10, 15 days, and you're doing this, it doesn't take long. And try, as we say, I mean, I joke about them, right? Because again, they're such an easy target. I but just don't think about it. When you brush your teeth, you don't think about it. Um, when you drive your car to Home Depot, Lowe's, you don't really think about it, right? You just, stop sign, red light, green light. You just kind of, you're just kind of executing. When we're trading like this, not really thinking about it, just doing it, just execute. Try not to get too far out in front of your skis. Don't try to, calculate the money in advance. That can bring in emotions. Don't look backwards. Don't punish yourself. Don't ever say to yourself, geez, I made all that money. No, it's gone and I wasted all that. That type of thinking can be very counterproductive, not just in trading, but in other things. You just don't, right? We learn from the losses and the drawdowns. We just got to keep them, just like in other things in life. You can learn to play golf from some of the bad shots. You get on a par five, you get a shot to maybe get on the green, and in two, you're really doing well. You start thinking about breaking 80, and suddenly, you stretch, you try to play a little bit more game than you got. And the next thing you know, you wind up with a triple, and you shoot your handicap. But you can't beat yourself up. And the next time you're there, maybe you choose not to. There was a kid, his name is Zach Johnson. Zach Johnson. He's a little golfer. He's been around a long time. He won the Masters, right? And the time he won the Masters, his strategy was not because he's not a long ball hitter, but he's deadly accurate, at least in his day. And hell of a good person too. And he was not going to try to get on the par fives in two, or actually in three. It would be in three. You know, he's going to try to get on in let's see, what am I thinking here? I have to think about his game versus my game. No, he would be trying to get on in three, right? But most of them just trying to get on in regulation. So Zach was just going to try to get on in regulation. And so he had 3 great days doing that. He was deadly accurate. Then they asked him, is he going to try to press and do better on Sunday? He said no. And he was in the lead. No, I'm going to play the same game. And he did, and he wound up winning. So you want to, I think we're always doing other things, but I'm always saying this to Susie. I'm always saying this to everybody. Settle in on what works for you and own it, marry it. Just hang in there. And if the market keeps letting you play, the way you're playing, play it. Why not? That gentleman, Zach, by the way, he lived in Orlando. I can tell you a funny story. And it was back some years ago, and I was working with a company, and I won't say who, but one of the guys I worked with, he lived in Orlando, and he was not a golfer. And Zach lived in his neighborhood, and and so he had just moved in. And so my buddy, he was older at the time, and he's out meeting the neighbors, and he's talking to one of his neighbors. And then, Zach comes by. I don't know if he was wheeling a baby carriage with his wife, whatever. They all got to be talking. And so they, just neighborly. Now, my buddy, he had no idea that he was talking to Zach Johnson, who's a Masters champion. Somehow or another, the conversation turned to golf. And so my buddy said something, yeah, I like to play golf and everything. They started having a chit chat. And so my buddy says to Zach, not knowing, Zach, welcome to the neighborhood. We got to get out and play sometime. Okay, yeah, I'd like to do that. And then he goes on his merry way. And the other neighbor says to my buddy, it's like, do you have any idea who you just invited to play golf? Yeah, Zach. He goes, no, do you have any idea who he is? I'm like, no. What are you talking about? It's Zach. He goes, he's a Masters champion. He's like, oh my God. They had no idea. It speaks volumes about both gentlemen, but also about Zach. Yeah, very nice person, and a hell of a golfer. Humble, discreet. I don't talk about the market outside. I don't. And when I'm here, I talk about the market. Or on YouTube, we talk about the market, but I don't talk about the market outside in public. I just don't. Even if somebody brings it up, try not to. It is what it is. And we do these YouTube sessions just to create some awareness, so that hopefully encourage you, find out a little bit of who we are, so that you can go to the website and explore and decide for yourself it's something. But we're a mentoring site. I'm not going to give you the specific trades, not going to manage your money. I'm not making any claims. I'm not even suggesting that this is something that you should do. In fact, I would go so far as to say that most people, this would be heresy, right? For most, to say most people probably shouldn't do this. They're just not, maybe equipped. Now, this baby has come back here, and I'm going to take a little peek. I think I'll sit tight on this. But we are getting in the realm where I'd like to maybe, turn the strategy off and be done. And so we'll just see what we can do here. If you have any questions, let us know. There was another scene, but it was a meme of a lady golfer. I don't know if you saw it online on the Twitter sphere. Of course, I follow the golfers, so I see all this crap. But um, and very young girl, or in her early 20s. She's on the LPGA tour, and she's at like maybe Top Golf or something, driving, hitting golf balls, and she's working on her game. She's doing this or that, and maybe her coach was filming her, and she's hitting the golf ball like I've never hit the golf ball. And so she may have hit one off center a little bit because she was working on something. And you hear a voice come from behind her. Oh, you might want to try doing this and doing that, I'm just, I was watching, you might want to try that. And she stops what she's doing and oh, is that right? Very, very polite, very humble. And this guy he's out of camera view and he's like, yeah, I've been working at this game a long time, and I've been playing like for 20 years, and I found like if you do this, and she's like, oh, okay. Okay. All right. Well, very nice. Yeah. Well, I'm just kind of working on some things. That's all. She didn't throw it in her face like, I'm an LPGA professional. And she's just got a grin. The video of this, if you see it, it's gone viral. She was so classy, so nice. And then she just politely says, I was just working on a few things, and then goes back to hitting, her normal shot, and this ball just like goes like a rocket. And then you hear the guy say, see that? See that? How did that work for you? Oh, very good. Thank you. Thank you. It's classic. But she was so classy. I can't think of her name. She wasn't an American. I think she was a Brit. We're here to try to help everybody. So and you can please know this, and we know this, and we're totally comfortable with this. You can play better. You could take our tools and do better. And but I'm not trying to beat you. You shouldn't be trying to beat me or beat anyone. You're just trying to play, right? You're trying to do better. And it's not a zero-sum game. It doesn't hurt us. It's great. Is this the girl? Yeah, thanks. This is Parker. Thanks, Parker. I'll post it in the me. I think this is the yeah, here it is. I'll play the volume. Thanks, Parker. Um, well, in fact, I'll just pull it. Let me see if I can pull this into view, right? Will I get in trouble for doing this? I don't know if YouTube will. This is the girl. And let me yeah, this is funny. So I'll play I don't know. I could get flagged copyright or something, but well, maybe not. All right. So here, this is the girl.
What you're doing there, you shouldn't be doing that. You should be right through, swing, follow through. Not you're doing too slow on the way up and then back.
Okay, I'm going through a swing change at the minute, so everything I'm.
What you're doing there is you coming back too slow. I've been playing golf 20 years. What you need to do is follow through a lot quicker than what you're doing there right now.
Yeah,
Look at that, coach.
I mean, I'm going through a swing change at the minute, so with that, I'm just making everything.
This cracks me up. Watch the golf ball.
Yeah, thank you.
Was that was classic. Let me drag this out. Thanks, Parker. Classy girl. My brother and I back years ago, we were playing golf course, Greenleaf in middle part of the state, big golf complex and stuff. And um, you never know who you're going to get, playing. And if you're going to get a playing partner, we were just about to tee off, and this little girl, I'm saying little, smaller than this girl, and younger. I don't even think she was 18. She's like 17, 18 years old. And she goes, do you gentlemen mind if I play along with you? Because it's kind of a busy day. And we're like, oh, yeah, no problem. Now, we didn't say anything to each other, but we're thinking, oh, shit, I mean, I'm being truthful. Like, oh, shit, this 3.5 hour round we hope to get in is now going to, maybe be 4.5 hours, but like whatever. And then she says to us, so we're playing from like the men's tee. And there were these other tees there that were not ordinarily there. They had a different color. They weren't the pro tees or the tips. But it was back behind us. And she says, if you don't mind, I'm going to play from that tee. No, shoot, play whatever tee you want to play. But it was actually behind us on the first one. Well, make a long story short, whatever concerns we had for like a 4.5 or 5 hour round, the sexist view that we had, you can say it, was quickly dismissed as she drives the golf ball, smack right down the fairway, long, straight, and right past us. Like, holy shit, what have we just stumbled into? And this girl proceeded just to carry our asses around. And I'm trying to remember, her name was, I don't know if she ever made it on tour, but I remember her name was Lisa Putman, Putman, Putman. And it was what a double. I mean, we spent a good part of our day actually just watching her play. Long story short, she was practicing for what was going to be a qualifying round for the Women's US Open on this particular golf course. And that's why she was playing from the tee markers, So you never want to judge a book by the cover, I guess, because this girl what a pleasure it was to watch. And I can remember asking her, when my brother asked her, I was like, at what age were you when you started kicking your father's ass? She's like 12. It was a pleasure. It was unbelievable. She was fantastic. It's happened before, down here. We got quite a few, exceptional golfers on these golf courses down here, and young kids too. Just remarkable. Okay, this is looking really, really good. I have view on this point and figure. You don't have a view on YouTube, but I do, and this is another good looking trade we're in. So we're gonna just let this one breathe here. This is really, really sweet. From 6 p.m. last night, fully robotic, no intervention. We got $2,100 in our pocket, maybe soon to have 2,700. So, here we set out on this particular strategy. We've been working with this thing for, I'm going to say 4 weeks or so. The code is elegant, it's beautiful. It was meant to do a certain thing. It had mixed reviews on what we're trying to do. And so we said over the weekend, it's like, well, let's not fight it. Let's make some adjustments. And so when this rolls out to our members in beta, it's probably going to have a couple of different ways to trade this. And but I'm so happy that we stayed with it. For those of you that saw on Thursday the 3-line break, it didn't do that well, but we're still going to come back to it. But we decided we'll stay with the point and figure because we had all that experience on point and figure. So this is really, really, really good here, guys. For those of you that are passing by on YouTube, our members have access to be able to patch in on Zoom. So that's you're saying, who's he talking to? They can check in or patch in anytime they like. Thanks, Parker, for that video. Breaks up the day, right? Yep. Yeah, it is. It is. Um, they say that on the golf course, that you can learn a lot about a person, and I think that you can. You can. And and sometimes it's not good, right? Um, I've had the good fortune and the misfortune of playing, with some folks. And, if you're prone to throwing clubs, um, it's just not good. Doesn't make for a good day for you. It doesn't make a good day for the people you're playing with. Um, I know some people, and try to not to be even judgmental there, but I think they're doing it because not because they want to, they'd rather not, but they're just extremely frustrated. But they also may have, when you're talking about golf, they may also have a higher set of expectations than what their game is really prepared to do. And maybe they haven't practiced, maybe they haven't given themselves, the opportunity to play better, maybe they should. Um, they just have a higher expectation of it. And there's so many parallels to it too. If you're, whatever the level is, maybe you're trying to break 90, maybe you're trying to break 80. If you suddenly, what my experience has been, if you suddenly become too cognizant, too aware of that number, if you've never played golf, of that number, it suddenly, it can go to hell in a handbasket. So for instance, I mean, because you can calculate, you're on the 13th, 14th hole and you say like, oh shit, man, all I have to do is get, I could, maybe a couple of pars and even afford a bogey and I'm gonna have a shot at breaking 80. As soon as it seems, that creeps into your head, boom, you wind up with that triple bogey on 15 or 16 and the opportunity is come and gone. Um, I've learned people's trading teaches me a lot about them also. Yeah, yeah. Parker says people's trading teaches me a lot about them also. Yeah, absolutely. Um, and if they admit it, they probably, they learn about themselves too. Um, I wanted to show I want to show everybody this. We showed it earlier. Um, this is something that and Parker, you might be interested in seeing this too. I'm going to punch this up. Now, this is a radar that is not ready. It's not ready for prime time. It's not ready to come out yet. But it was something called a trade planner. Let me lose this, and I'll explain to you what we're working toward. It was a radar so that we could begin to help folks plan. And I won't begin to explain everything that's here, but it's still very much a work in progress. But let me highlight something in terms of making folks aware. I'm going to highlight this section right here. And the idea here is so that you could visually see what a person might be doing. So let me come in here. I'm going to set a stop loss amount of, let's say, $200. And I'm going to set a profit target at 200. And this will calculate what is the necessary win-loss ratio to break even? 50%, right? Pretty obvious. So if you have a stop loss at 200 and you have a profit target at 200, you need to be over 50% if you're going to make money, right? Now, what happens when you widen the stop loss? So let's widen it. Let's push it up to 400. So the profit target is still 200. The stop loss is 400. The necessary win-loss ratio to break even is now 66%. And what's insidious about doing this is you will win more than 50%. You'll win 52, 55, 60, and it'll feel really good. But if you don't get up and over 66%, you're not going to make any money. You're going to lose. And now let's say you're following someone, a hockey captain, and he says, we got a win-loss ratio of like 90%. But the stop loss, I'm gonna put this up to $1,600. What if we had a stop loss of $1,600? Keep the profit target at 200. You know what? You are going to win a lot. You're going to get a lot of $200 winners. But if you don't win 89% of the time, you're going to lose money. That's a problem. Because it's only a matter of time before you do that. What if you go the other way? So we were at 200, 200. What if I put the stop loss at 100? Oops. No, that's not that. We'll keep that at 200. It was the profit target. Let's put this at 100. Now, you may not win as much, and it may not feel so good. I had a losing trade. I had a losing trade. I had a losing trade. But you only have to win 33% of the time to break even. So if you win 50% of the time, you're going to do really well. But everybody they want to win on every single one. Now, some of these other tools here are still in a work in progress. One of the other things that we wanted to calculate, I'm not prepared to explain it, but because I got to revisit itself. But the idea here is that you could, when you have leverage, let's say, I think it's an input, but so again, I wasn't expecting to go here, but there are, let's see, average, where do I have leverage? Okay, so I don't have the leverage in here. It's what they're actually providing. But when you increase the leverage, or the brokerage increases leverage, we have a blow up factor, right? So when we have leverage of 14.69, 14 times, if the underlying moves 6.81%, you blow your account up. So when you get leverage of 100 or 200, it takes a very, very small movement to blow yourself up, So, but this is a tool that we're working on to be able to address and visualize for our members. It's not ready for prime time yet, but I did want to show everybody. It isn't enough. It isn't enough just to have the stop loss and the profit target and flip a coin, but you would do better in our view. You just gotta be careful about not introducing too much, noise, but hopefully that's a visualization, because the retail, what did I just do? I messed it up. I don't know what happened to my other screen. We'll pull it up here in a minute. Uh-oh. Way to go. I hate when I do that. All right. It's someplace. I'll find it. So folks could sometimes, you could have a decent strategy and a decent approach, but you could be doing something that feels good. Huh. Oh, here it is. I'm sorry. I got to bring this back into view. And then I think I can just blow this up. And you could be hurting yourself. and you could be hurting the strategy. And you keep doing it. And like golf, one of the nemesis is slicing the ball when the ball goes to the right. And the more the ball goes to the right, the new golfer will do what? He will try to swing to the left. And guess what happens? The ball goes to the right even more. It's kind of counterintuitive. But when you start swinging out a little bit more to the right, just a little bit here, and I'm not a golf pro, but you begin to let the club work and you can move the ball from right to left. It's a little counterintuitive. This particular strategy that we're working on, I can't take you down into the weeds on this. I can't. Our members wouldn't like it, but we are going to take them down. We set out with a preconceived idea and a preconceived notion, and because of all the time that we spend, it's like, no, it's not doing that. The ball isn't coming back to the left. So we need to make some adjustments, and we'll play with what we got. Now, the conditions on this strategy might change. They might be different tomorrow. They might be different Wednesday. They might be different a week from now or 2 weeks from now. So when we build out this strategy, we're going to have to build in and explain to our members how we got to where we got to and what one might be able to do so that they have the capacity to tweak the strategy and to make adjustments on the fly, so they understand, if that makes sense. And if any of this resonates with you, then be sure to visit the site. Be sure to give us a shout. If it doesn't, that's okay. Totally all right. When the market is like this and just doesn't want to let go, it is what it is. It does this a lot. Mostly, in the last 10 years, it's mostly on the bullish side, but it will happen on the other side. And you want to learn the game before all hell breaks loose. And what will invariably happen when all hell does break loose, we will suddenly get swamped with folks wanting to learn the game. You want to learn it when it's like this, actually. So the lesson though there, hopefully visually, controlling the losses and keeping the losses small take pressure off of your win-loss ratio. They take pressure off of that, and you can stick around longer. Leverage, beautiful thing. You just don't want to be over leveraged, even if they give it to you. So we had a person talking the other day about, the leverage that the brokerage company is prepared to give you, and just because they'll give it to you doesn't mean that you want to use it. Because if you use that leverage and you get a very minute move, and the loss represents 10, 15, 20% of your trading capital, then yeah, you're going to be under huge stress, huge pressure to keep refunding it and refunding it. And people will do that, right? They'll have a small account, do significant damage, and then fund it again and fund it again and fund it again. It'd be better just to wait, fund it, and keep that leverage low and build it out over time, small. You can do it with not just futures, but you can also do it with credit spread options, not using a lot of capital and not watching the market intently day to day, and build out an account and or restore an account. And we love credit spreads for that reason. So this is still looking very good on this trade here. It looks really pretty sweet. We're at 230. I'm really thinking that we need to make a decision to shut down here. I'm going to see if we get another little pop. And in fact, I'm going to go ahead and disable the strategy and
order filled
and close the position. So the strategy has been closed. We're in the house from midnight to now with 2,500. We're going to turn it on again tonight at midnight, run it again tomorrow. That's what we're going to do. We'll still have Swing Machine up, and we're going to take our notes. We're going to take a look at this. And for members that are passing by, rest assured you will get a beta, I promise you. But we're still learning. So, but I do think that sometime this week, we have a whole host of things that we want to get out to you, though. So for the next few weeks, there's going to be a lot of new things coming your way. And so on YouTube, we need to sign off. If we'll give you a couple of minutes. Anyone's passing by, got any last minute questions? Otherwise, we're going to bring this YouTube session to a close. We ended up being on longer than we thought. And if you're getting it done with whatever you're doing, keep doing it. If you're not, and we resonate with you, feel free to give us a shout. And we're ready when you are.